Hi, this is Andy Filipiuk in Toronto for the week of January the 19th. As we head into 2022, it's hard to determine which asset classes are going to do well. Now, it's pretty well built in that we're going to see higher interest rates throughout 2022. The question is, how high do we get? Now, I've included a chart of the real Fed funds rate minus inflation and charted that against the gold price. And historically, one can see whenever the Fed funds rates become negative, meaning the inflation rate subtracted from the Fed funds rate, that's generally been a very good time for gold. We saw, a huge explosion in 2011 on the gold price, very similar to the drop that we saw in 1981 when the real rate of interest rates went very, very high. Now, to try to put this time in perspective, historically, in normal times, if there is such a thing, we've seen the real Fed funds rate has typically been 2 percentage points above the inflation rate. Well, that's totally impossible through this Fed tightening, because right now the U.S. is sitting at a 7% year-over-year inflation rate. So I think we're probably going to get as high as around 2% on the Fed funds rate, which means if this inflation continues, we're going to have negative interest rates for a very, very long time, and this should be very good for gold. Last year, as I mentioned, a little disappointed with the price move, but if you can see the previous 2 years, we got, I think, some good moves on gold in anticipation of this inflation that we're now seeing. So 2022, if history's any guide, should be quite good for gold as it hedges the inflation that the Fed will now be forced to fight. Thanks for watching.